New high NASDAQ.
Hello traders, it's 8:01 a.m. Chicago time on Wednesday, the 20th of January, 2021. Today is Inauguration Day here in the United States. This is episode number 1920. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at where we are today, we're going to pop right into the Convergent Trading pre-market summary sheet, and we are solidly risk on. The NASDAQ leading the pack up 129.75 points as of the printing of this pre-market stat sheet, which was about 10 minutes ago at 7:50 Central. Crude oil also taking a pop. Crude oil has been sitting sideways for the last couple of days and has steadily pushed higher. Actually, that's not true. It pushed to a double distribution yesterday and closed near highs. But so it's we're pushing higher. If the background noise is too loud, just let me know. I'll reduce it. I have a lot of audio alerts and news feeds and things like that. So I just don't like to turn them down because then I forget to turn them back up. So again, allocation is to risk. The market is popping higher this morning, and so that's where we stand. We have the notes in the 30 years lower, but not by much. Gold is holding steady around 1850 or so, and that's where we stand. Looking at today, again, all eyes will be on the presidential inauguration, one that is very, very much militarized. Unfortunately, it's a sad day for all Americans, I think, to see the seat of power, the U.S. Capitol, being guarded by 25,000 troops as part of what is normally and should be a peaceful presidential transfer of power. But I'm not going to get into the politics of that here. The market is watching this, and it's popping a little bit higher. And then there are also a slew of executive actions that have been sent to the Hill today by incoming President Biden. So we need to pay attention to those. Stimulus is going to be front and center, and the market is definitely listening in on that. At 10 o'clock, we get NAHB Housing Market Index. At 4:30, we get the API crude oil stock change. Remember that because of the holiday on Monday, the EIA crude oil inventories are pushed to tomorrow, along with they'll be released with natural gas. This evening at 6:50, we get the Japanese balance of trade in December, for December. So far, the S&P's traded 173,000 contracts. That is a little lightish, but in line with what we would expect, what we would call normal. The inventory is even more to the long side. Remember, yesterday the inventory was about 98%, something like that. This sheet here, by the way, all you have to do is follow Conv Trading, which is listed right up here. So you go to Twitter, Conv Trading, and hit the follow button, and you'll receive this at about 7:50 Central every morning. And of course, you can create your own, but use this as a guide. The overnight inventory yesterday was about 90 something percent, 96% long, and you saw how it pulled back, and that's why the inventory number is important. It kind of gives us an idea of which way the market is maybe tipping. Today, 76.6% long. 0 means it's balanced, and negative means it's short. So the market is again trading well above yesterday's auction, yesterday's closing price. The range is relatively small. It has expanded a little bit. I think it's at about 24.25 points at the moment instead of 22.5. The overall profile overnight is pretty balanced. It's really trading every price across the range. Nothing special, no indications, and nothing special on last night's profile. and it's playing out the main scenario that I talked about yesterday in yesterday's Trader Bite. So we'll go over that in a minute. Again, pay attention to these numbers here, the rotations, the expected ranges, and things like that. These are all statistical probabilities based on this information down here. We'll move on to the review segment now. Let's take a look at what was expected yesterday versus what we got. Here's what I left you with yesterday. The primary expectation, given the inventory, given where we're opening, right on top of the overnight point of control, which is right in line with the MC point of control at 94.95. The expectation with the inventory is a pullback. Expected it to push back down into the 77-ish area. Expected some kind of chop in the 81 area, and I was looking for an impulse higher back into 95, consolidate, and then push the I was looking for it to push the 3,800, and then a potential for a continuation into, what was the number? 3,809. 3,809 is the next major balance area above, if you recall. Talked about that too. 3,809 being the key target above, and that's this hump right here. That's 3,809. That was the high that I was looking for. So again, pull back to around 77, and then set up a base from which to catapult back into 95, struggle at 95, struggle at 3,800, clear it, and go to 3,809 is the primary scenario. Here's what actually happened. Opened at 88.25. We test up to 92.50, and then we pull back to 75. 74.50 was the prior day's point of control. I did expect some sort of support right here, but it pushed through by a couple of points, pulls back to the VWAP at mid, pushes down, pulls back to VWAP, pushes down, puts in a double bottom at this point, a local double bottom. So this is now a weak low, and then it finally starts to push higher. I found this area very, very difficult to kind of read. It's, we're back inside of the prior day's range. That's the prior day's high right there, the green line. Push back into the prior day's range, the prior full session, I should say, which refers back to Friday, not Monday. And then as it pushed out of the range and through the mid, I started to look for longs, anticipating that impulse higher, and that's when it turned down and extended the range down to push into 72, further into the low volume node, the low volume zone in the overnight session. Not a pretty picture, but ultimately we started to get this. We finally get our first impulse here. As you can see here, the rotation is 9.5 points. That's impulsive. First impulse, so looking for a continuation. It finally gets neutral yesterday. But again, was looking for the 3,800 test right here, which is low volume node on the composite. Was looking for 3,800 and consolidation. I was looking for it to rip through to 3,804, then 3,809. No such luck. What a fugly profile. Looks like a guy screaming. What an ugly profile here. It's essentially price discovery throughout the range, active price discovery throughout the range, with, guess what, the point of control on top of the MC point of control. Again, the market is just hanging on to balance for dear life here. Even though we crossed the opening price, we never crossed back over the delta zero line, which represents the opening price. So price was higher, but delta just did not participate in that continued push. However, just like it's been for the last 3 years, the overnight session is the one that gets the job done. We open up. We immediately push through 3,800 to the 3,804. Basically, 3,804. Remember, that was the stock zone. The stock zone is still here, 3,804. And then it pulls back, consolidates, and then we wait for the European Open, and then we start to make it to that 3,809. So essentially, we performed yesterday's scenario 1 partially during the RTH session and then completed it in the extended trading hours after the European markets opened. So as I said yesterday, it's it's 27.95, now 94. It's shifted down a little bit. 27.95, 38.04, 38.09, 38.16, 38.23 and a quarter, 38.24 and a half. Those are the big battle areas ahead of us, okay, on top. And that's where we are right now. So we're likely to continue to drift up. Again, the market was concerned about this transfer of power today. It looks like it's a non-event. I don't know when he becomes a former president, but Trump has jumped on a plane headed down to Florida. Mike Pence is attending the inauguration, and it seems like it's a fairly quiet, civilized affair, and maybe too much too late in terms of security for the inauguration. So I think the market's just relieved that this is behind us, or it's going to continue to experience relief as this is behind us, because what it does is it lays down a path for more monetary policy, more fiscal and monetary policy, with the confirmation of Janet Yellen that's expected tomorrow, and the fact that yesterday she talked about a very strong program is needed in terms of stimulus. I believe the market is already anticipating this move up. Again, this isn't politics. I'm talking markets. If you're sensitive about what I'm talking about, go ahead and just hit the close button. But this has to do with the market. We have to pay attention to what it is doing. Inflation, as they say, is not a real thing. Inflation is a mental construct. It only occurs when people think it'll occur. So we'll just keep printing money, and there's no reason to fight it. So that's where we stand. Let's take a look. Oh, by the way, I do have an announcement for you. Tomorrow, I was invited to come on to Futures I.O. For an open AMA. I'm going to be talking about trading. Are you doing what it takes to trade right? Tomorrow at 4:30 p.m. Eastern, I'll be on Futures I.O. You can join it by going to ft71.com/ all lowercase FIOAMA 0121 FIOAMA 0121. It's also in the description of the YouTube video. You can join from there. Happy to take whatever questions you have. Join me tomorrow. For Convergent members, tomorrow we have Dr. Andrew Menaker, our resident clinical psychologist and trader, discussing the obstacles to doing what you need to do to be consistent. That's for members at noon Central, 1 Eastern. Let's move into what's expected for today. All right. Tough play today, to be honest with you, given the way we are set up currently. It could be a runner here. We are already pushing the NASDAQ, ripping through all-time highs, trading at 13,135. The former high is around 13,132. Actually, I don't even know what the former high is. Let me see. Let me turn on my master levels here. All-time high 13,118.75, something like that. This thing is just tearing it up. So we're gonna open up it with a runner. The inventory is still long. I'm looking for a response as we open, not by much, maybe a push down into the 09 area, 04 potentially, 04, 09. But looking for it to take out the 16, the prior week's high, and then push into the all-time high, looking for 32s as the next key area. Very simple. The trend is your friend type of situation here. We are one-time framing up starting yesterday, and we are just continuing to tear it all up. So that's where we stand. The market's maybe a little bit euphoric, expecting some stability with China and so on and so forth. There's just a lot that the market has to digest here, and it looks like it's digesting it by buying. The secondary open, immediately push the high into 16, pop through the 16, find sellers, come back in, and then in that situation, I'm looking for it to actually get magnetized and pulled towards 37.95 before it bounces and starts to run back up on the close. Not a very likely scenario. I'd like to see some selling because that cleans house and gives us some volatility, gives us some range, and so on and so forth. So these are the two key scenarios. We're opening in a gap from the prior session, so do expect some sort of pullback. But overall, look for the gap and go situation, push through 16, and then all-time highs beyond there. Okay? I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take care.